Hey, happy Sunday, Matt. How you doing, my friend?
I'm doing so good, Jace. How are you?
I'm doing all right. I'm doing all right. It was a bloody Friday that we were kind of fearing, but boy, it was pretty ugly. Let's take a look at some of the charts real quick and
Do
talk
it.
about what to do next here a little bit. All right. So first off, we're starting with the S&P 500. If we end up down tomorrow, that will put us into a red zone. So kind of hoping that doesn't happen, but all signs are not looking good, especially when you look at the leading stocks. The Nasdaq Composite, again, nice strong sell-off on Friday. Let's just get rid of that. Another nice sell-off on Friday, 2.3%. It's getting pretty consistent there. We're starting to see very small up days and very strong down days. That's kind of the opposite of what we want to see there.
Yeah.
And then when you look at the chart, it just got a clear ceiling right here, right? So while the S&P was able to kind of break above that, this is the second failed attempt at that. So it might just mean a trading zone, just a little bit of work to do before we move higher, or we could see a break lower. It's not looking very good right now. There's the small caps. We were hoping to see some movement above their VWAP, and it just sold off hard.
It said nope, and ran the other direction.
Yep, said no soup for you, right? And then same thing with the mid caps. Mid caps sold off a solid 2.3% on on Friday. So it's all in all, it was a very, what started out somewhat positive. We had some breakouts on Tuesday, and then they followed through on Wednesday, and then everything just run into a wall. And so even overall, the overall breakouts, we were at 60% positive above their pivot point last week, actually about 59%. And then that completely flipped. Now we're at about 60% or below their buy point. And that all pretty much happened on Friday. And then we saw some round trips too, some really nice gains, completely wiped out, taken off the board. So all of that money was flowing right into bonds. And so usually, you like to see, we wanted to see bonds kind of settle. We didn't want to see that come at the expense of equities. So it's a little bit unfortunate there, but that's just the flight to quality trade is what you're seeing. Unfortunately, a lot of the stocks that we follow are setting up for sell signals or flash sell signals. So we will review those for our paid subscribers in our error review on tonight's website. However, I do want to kind of just real quickly take a look at a couple that were pretty significant. We have talked about HIMS, pretty solid move. Like I said, it went up over 100% in about 3 weeks, but it's giving back. It dropped a solid 25% on Friday, and it doesn't even look like it hit the chart all that hard. But that's when you zoom out a little bit, that's a pretty significant peak right there.
Yep.
And then new holdings flashed by a sell signal earlier in the week, and then it followed through on that signal. Did kind of the opposite of what we want to see. It was down 18% on Friday. That was pretty ugly. Algo continued to follow through on its sell signal. It was down 9% on Friday. And then the big surprise was Axon, the one that did flash a sell signal last week that I didn't really pay much attention to. I did use the strength from last week to take some profits, which protected me on that big sell-off, and then it just continued to drop off a cliff. So no support showing up there, kind of really no support anywhere. So that's now I shouldn't say that. The S&P is pretty much right at a support level, right at a VWAP. So we'll see if we get any buyers around here. A lot of leading stocks sold off hard. So a lot of them, but they're all above kind of support. Usually when a stock breaks out and it kind of trades off a little bit, you will see some buyers come in at previous VWAPs that it broke through. But a lot of leading stocks are still above that level. The S&P is right on that level. The Nasdaq is below that. And of course, IWM and MDY just never got that chance. So it's going to be an interesting week. I think NVIDIA reports this week, so all eyes are on that. And then, of course, we've got the current administration and some of the geopolitical aspects to that. So that could very well be playing a role. I know it's causing a lot of uncertainty, and the markets just generally don't like uncertainty as a rule. So it's going to be an interesting week. Not as exciting as it was last week. Looking through the watch list, there's really not a lot setting up. And the sellers, when we take a look at the arrow review, it was pretty ugly. So I do want to show what I was kind of looking, hey, this could be a top, right? We've got our second rejection of the S&P making a new high. We've got leaders falling apart all over the place. So I took a look at what did the last two tops look like. So let's just take a look at what they looked like. So this was the S&P 500 here, and this was, I believe, in right before the pandemic. Kind of a similar pattern to what we're doing now. It had a little bit of a correction here, and it kind of raced into new high grounds, and then all of a sudden, just two back-to-back big days, and then we all know what happened with the pandemic. And then this is the top from 2020. Again, kind of a similar pattern. We were basing out a little bit. We were breaking out into new high ground territory, and then
Just
all of a
to
sudden,
confirm, real quick, don't mean to cut you off there. So the previous one was 2020, or this one is 2020?
All right, so I always get these mixed up. This is 2020, and then the other one was 2022. I always get those those dates mixed up. So yeah, this was right before the pandemic. Indexes were right at high ground, just coming out of a consolidation, and then of course the pandemic happened. Then right here, this is the same thing. A little bit of choppy before that, but the market was breaking into new high territory, and then just a solid rejection, just pushing it right back down into range. And then it just continued to slide for another 2 years. And then this is where we're at today. It's kind of a similar pattern, a little bit of chop going on, trying to push into new high territory. We've got two attempts, and this attempt is just being sold off, kind of being clearly rejected. So not a very good look. I just want to stop presenting here. Not a very good look moving forward. Like we talked about last week, we want to see the farm team step up, right? Well, farm team just got completely decimated. Everything got pushed right back down. And so there's really not a lot. The good thing is a lot of the leaders are flashing sell signals. So what does that do? That resets the count for the algorithm. So it literally could just take a couple of days, and these things are starting to come around and buyers come rushing in. And in 4 days, we could literally be singing a different tune. That's how nimble you have to be. A lot of this, just these move so fast. If you just get set in your ways, next thing you know, you're losing, and everything's running by you. Or if you're holding, all your gains are completely gone. So you do have to be quick on your feet. We never say, hey, we're bullish, right? We're 100% in, and we're sticking to our guns. If you just can't do that, right? Unless you're buying the S&P 500 and you got 20 years. I do have investments like that as well. But as far as a lot of these stocks that we're just trying to catch these waves, you got to be in and out and be really nimble.
Mm-hmm. Yeah, it's kind of funny you say, we were hoping for the farm team. And that goes back to an analogy that we had used in one of our previous stock talks about you need to have your up-and-comers always ready to go. And it's just funny that, when you turn to the farm team and there's nothing there, it's like the entire sport just switched and said, let's try out for Olympics, diving, see what we can do there, but as you also said, that doesn't mean abandon all hope, everything's doom and gloom, we're done. A lot of it is you get out when things are looking bad, you take your cash, you take what wins you did get, and you prepare for the next wave when those next ones are coming. It doesn't mean, oh no, I'm going to lose everything, unless, again, you are that long term and you're just going to ride this out and see what happens. That's not us. That's not what we're looking to do. We don't want to be there.
Yeah, it's that's really risky too, right? I mean, just look at the charts of like XYZ for Block or Upstart Financial, Shopify. Let's see, there's so many more. Crocs, PayPal, eBay, Zscaler. You could go on and on and on with these stocks that do that, right? You get these big leaders, they go, and then when they crash, they just never come back. I mean, take a look at Celsius, for example. Just pull up a chart for Celsius. I remember I was reading somewhere, they were like, oh man, I'm buying this up at 90. And they were like, man, I'm buying even more at 70. And I think it's down around 30 last I saw, maybe even 20. So I don't trust it, right? You just pay. Stock is only worth what someone's willing to pay for it, and that's it. And you never know what's going to happen. For example, Cisco. We've talked about it before. It still has not hit its highs from 1999. So the long-term holders are saying Cisco will come back. Juniper Networks, I don't think has ever recovered from back then. It took Microsoft 16 years to recover from those highs. So yeah, Nvidia is a monster, right? Nvidia looks like it's coming back, it's holding, but it could take years for that stock to turn around because it ran up. The expectations were so high and so built into it. It might be dead money for some time. So, I don't look at it that way. I don't look at, I'm very nimble. I like to keep, we kind of preach, keep our cash, protect our capital so we can catch the next wave higher. I don't like a lot of volatility. So when anything's are going against us, and when stocks go up, they go up. There's no decisions to be made. They just go. And so all this chop that we're seeing, all this uncertainty and this volatility, that's indicative of a relatively weak market. And to see these breakouts move up 20%, 18%, just get wiped out in a day or two, that's not a healthy market, and so it's time to step back a little bit. Let's let the dust settle, and let's just wait for the odds to get into our favor, because that's how you beat this thing. Is you just wait. You don't fight the tide. You make the trend your friend, and you wait for the odds to be in your favor. And when the odds are in your favor, you take the risk. When it starts working, you take some more risk, and then when it stops working, you get out of the way. You just have to be very nimble, and that's what we do. That's what we look for. That's why we watch it every day, particularly against the VWAP, because once they start living below the VWAP, usually volatility picks up, all heck breaks out. The good ones recover, and most of them don't. So that's why we let the algorithm do what it does. We just let it say, hey, now it's underneath its VWAP. Let's get out of the way. I'll tell you when it's back, and then I don't even think about it. I just move on, wait for the algorithm to tell me when to get back in. And usually I'm glad I avoided it, because stocks are all over the place, and it's like, man, that's too much. So
and again, that's us in our swing trader strategy. That's specifically what we're looking to do. We're not getting into a stock for the dividends. We're not waiting for this to hopefully pay us out at some point in time. We're not trying to get ownership say in any of these companies. We don't care to buy that much. We're literally in it for the stock, what it is, the price it is, and we're nimble. That's it.
Yeah, we want to get in when it's being bought, and then get out before it gets sold. So I mean, it's just quick and easy. And the way to do that is with the algorithm letting us know, hey, this is when buyers are starting to take control. And then that's when we see it's already in a nice uptrend. It's clearing the last hurdle of resistance. And then that's when we just get on board. So of course it doesn't always work. It's not infallible. So that's why you always have a stop loss in place. So it's a pretty good model, and it's exciting when the market's in a good mood. And like we saw, just even the S&P was only up, I think, 1.5%, but we saw some monster gains, and they moved fast. And so all those breakouts that happened in the first couple of days of the green zone, they really took off. And so we were able to make some hay to catch up for some of that churning and some of that deep seek. And so when it goes, it really goes, but that goes the other way too. When it comes down, it really comes down. So that's why you have to be really fast, really nimble, and just stay on your toes and follow the rules, man. Don't go chasing. Stay right in line. When it buy on the third day, maybe buy a little bit more on the fourth day, and then if a stock goes down right away, then it's pretty much a failure. So trying to start scaling out and protect yourself. So it's a quick, easy, fast system, and it works. So it's pretty exciting to see it live and happen in real time.
And for our Patreon subscribers, those who are following us there, and if you're not, this is another shout out. You need to be in there. Go ahead, subscribe, patreon.com/Empire Algorithmic Trading. But you can always catch our breakdowns of where we're getting out. And it's pretty fascinating to see once we get out how much further it could be if you're not sticking to your rules. Like it's quite impressive. I guess you would say how little we can lose by following our rules.
Yeah. Yeah. There's nothing better than cutting. I mean, I shouldn't say nothing. I hate cutting a loss, right? I mean, it's you were wrong, right? You thought you were right and you were wrong. Okay. Admit I was wrong. And then to be proven right, to watch the stock continue to go down. That's always a gratifying feeling. I must admit. But I always like to keep them because I keep them watch on them because sometimes they do just come roaring back. And so then you just buy it back. So you can always buy it back. You can't sell it again. So I've learned that lesson. That's why that phrase, it's always better to wish you were in than wish you were out. And so hopefully our subscribers and our clients don't wish they were out if this thing does go south. So yeah, happy trading, Matt. Happy Sunday. Kind of excited to see what happens tomorrow and the rest of the week. If anything, hopefully the volatility settles down at least. Or ideally, what I would like to see is just a nice, good old-fashioned sellout. Get some everybody flushed out, so then we can just start making some headway. What we don't want are those big, long, drawn-out bear markets that take years to grind through. So hopefully that doesn't happen, but you just never know.
Yep, exactly right. And
all right,
stay tuned. We will daily break that down this week of what's going on in the stock market and everything. So if you haven't here on YouTube, make sure you smash that subscribe button, hit the likes, share it with anybody that you think could use some of this valuable information about our stock talks. And as always, subscribe to our Patreon, get our Arrow Talks, where we actually talk about the stocks that we see that have come across our algorithm as very hot potential breakouts or those that are losing and are good time to get out, where we dive into that a little bit more in depth and exactly how Jacey and I are using our algorithm amongst our own investment strategies and what we like to see and what we like to get away from. All of that can be found on Patreon. And if you're just looking to follow along and see some fun stuff, Facebook, Instagram, we're on X, we're also on Blue Sky. Make sure to follow us everywhere. And for more information on exactly what we do, visit our website, Vwapvision.com.
All right, very good. Thank you, Matt. We'll talk to you later.
Happy trading, Jacey.
Happy trading, buddy. Talk to you later. Bye.
Bye.